This is Jeff Killian for the Vector Traders Consortium. Time is now 8:47 a.m. Eastern Standard Time on January 6th, 2022. Happy New Year to everyone. So this morning I want to briefly cover our pre-market open analysis. The overnight session has been very light. Yesterday's sell-off was intense. For all the shorts that came through, there was a lot of money on the table to either have made or lost, depending upon how you have viewed your overall market, using the proper analysis techniques and strategies to be able to discern what's going on behind the prices. Now, the major levels that have been laid out, if we blow this up here quickly, ES trading mark to the market in a day chart updated in real time, your contract month 322 is right about 46.94 and 25. Here's yesterday's sell-off. Here's the open and closing channel price here at this point, where prices traded up into blue, above this blue line up into new blue skies. Okay, here that price on that, we'll use the open of 1230, was approximately 47.84.75. So that level was held and then traded off of on the open of yesterday's session and traded down sharply to the actual open price of 1223. Now, the downside had very little resistance because of the volume dry up you can see here. Some volume came in here, which took all of the last week out here, and eventually the prices could not sustain the level that they were trading at and had to trade down. And why? Because of all the multiple divergences, negative divergences in multiple time frames that existed well before these prices ever traded down. Now, for those of you who are new to divergence analysis, basically, we're looking at what's going on behind the prices to be able to discern what are the realities of future directional price movement based on pent-up buying or selling pressure that has not yet taken place in the form of future directional price movement. In this case, the big short that came in yesterday. So after we analyze the lack of volume and then the volume that came in here to push the prices through on yesterday's down day, the larger volume here suggests that we may continue to move to the downside. So let's take a look at those divergences, beginning with the money flow index. Look at the divided difference here, the slope of the line, if for nothing else, between this price area, and what the level of the short-term smart money is really doing behind these prices. It couldn't be any clearer that there is significant selling pressure built up behind these prices, that it's just a matter of time before they have to fall. So here's one example of an extremely strong negative divergence compared to the prices. And yesterday, things trade down because of the fact that the rubber band got stretched back so far that it had to snap. Looking at CMF here, similar but not the same. MFI is a 14-period look back with a different mathematical computation. Here we have CMF with a different mathematical computation and a 21-period look back, saying nearly the exact same thing. So here we have two of our most important smart money trackers to determine what's going on behind these prices, telling us both long-term and short-term, there's nothing to hold up the market, nothing. And then from that point, it's just a matter of walking through the rest of the indicators that I'm using. This is my actual workspace on ES NCM 322, right? And determining if there's anything else that we can extract out of these charts to determine, what are the realities of this move continuing down or not. Here's the Chaikin oscillator, similar again, but not the same, pegged to accumulation distribution on the MACD. And again, looking at this here, look at the MACD, another negative divergence here. And the SMI, let's take a look at that last, if we can get that in. There it is. So the stochastics momentum index, this indicator in particular, which is a strictly price-based indicator, in this case based on the closing price of every single day, which is actually in futures settlement price, says another negative divergence, the cross from above to below, and then the cross from above to below itself the 80, 90 overbought zone. This is the type of analysis that you need to do every single day with its proper flow in order to determine what are the realities of today's session, where and when do I have any real business trading, and especially when and where do we have a major market turning point in play that we can capitalize on 1, 3, 5, possibly 7 days. So to finish up, let's go back and look at the volume chart and look at some of these levels here. Again, this level here where prices traded through the channel that was established, okay, drawn from the close of 1231, again, 47.58.50, and a free and clear all the way down to here. Again, the open of 1227, and then here, the open of 1223. That price was 46.89 flat. Now, from this point here, the following levels to the downside will be, now this is based on an end of day basis, people. Now, this may not be 100%. We'll get the approximated levels in. Will be both here and here, based on these open prices. Free and clear to here, free and clear to here. I understand we have some volume that came in here at this point associated with these 3 days, 12/16, 12/17, and then 12/20, the Monday after the weekend. So here at this point, if we look at the relative comparison of these volume spikes to these prices, these are all down days. So we have some wind at our back here. The market has the potential to move all the way down at this point to 12/21's open. Again, the price is now 45.67.75. This is Jeff Killian with our pre-market open analysis for the Vectors Traders Consortium. The time is now 8:54 a.m. and we are on a time constraint because there's a lot of things we have to get ready for market opening on the equity side to determine how and where and when we're going to trade in real time. For more information on our services, just visit our website. You already have it, more than likely, vtctraders.com. We'll see you on the next vid. Be careful out there. The key to longevity is risk mitigation.